Hello and welcome to CMS Forex News. I'm market analyst Nick Nassad. Today is Thursday, March 26, 2009. Japan's corporate services prices fell for a fifth month in February as lower commodity costs and weaker demand for services pressured prices. Prices were down 2.6% on the year, though there was a slight increase in monthly terms. A stronger yen has helped make oil cheaper and has lowered transportation costs. The yen was weaker against its rivals overnight as equities in Asia and Europe increased, followed by gains in U.S. stocks as well. As a result, high yielders like the Kiwi, Aussie, and Euro rose against the yen. The Kiwi yen pair, for instance, rallied 170 pips, hitting a new 5-month high. Today's action cleared resistance from earlier this year at the 56.20 level, and if there is follow-through, that sets up a chance of a continuation of the Kiwi rally that we have seen so far in March. In Germany, the GfK Consumer Confidence Index fell for the April period, the first decline in 7 months. The index declined to 2.4 as consumers worry about increased job losses amidst a sharp cutback in production and business activity. In Europe, the money supply increased more than expected on the year in February. The M3 measure of money supply was up 5.9% compared to expectations of a 5.5% increase. Also in the release, the amount of loans issued to consumers and businesses in the private sector grew at a slower pace during the month, increasing 4.2% compared to January's 5%. This indicator has been trending down as economic activity weakens and banks become more reluctant to lend. UK retail sales declined 1.9% in February, a sharp contraction in spending that heavily undershot forecasts. UK consumers reined in spending as the UK economy continues to slide deeper into recession, which has resulted in rising unemployment. At the same time, consumer inflation rose more than expected in February, adding further pressure on the UK consumer. The UK economy is expected to show a sharp contraction in the first quarter, similar to the 1.5% decline seen in the fourth quarter of 2008. UK business investment for the fourth quarter was revised to show a smaller than expected contraction. Investment was down 1.5% on the quarter, the final version showed, which was less than half the decline that was originally stated in the preliminary release of this indicator. The euro-pound pair, which was sliding to start today's session, found support at the 0.9275 level. That was about a 38.2% retracement of yesterday's run-up, and the euro continued its rally from there. That support also coincided with the weak UK retail sales data, which pressured the pound. In New York trading, the pair rose above yesterday's high near 0.9380. That action also breached a downward sloping line of resistance that had been established in the last 5 sessions. The pound declined against the dollar as well. The pound-dollar pair retested its high from overnight following US GDP data near 1.4640, but was unable to reach the downward sloping line of resistance established the last 2 sessions. From today's high, the pair slid 180 pips to the 1.4420 level. That broke below a level of support that would have created a channel for this pair, and price sets a new low for the week, though just barely. In the U.S., new jobless claims rose by 8,000 to 652,000, close to expectations, while the number of total claims soared to a record high of 5.5 million. The data is consistent with further steep losses in this month's non-farm payroll report. The U.S. economy contracted at a 6.3% annualized pace in the fourth quarter, the final version of US GDP showed. That was a slight downward revision from the 6.2% seen in the preliminary release. The downward revision was a result of inventory liquidation, as personal consumption was unrevised. Though the data shows the economy contracting at the fastest pace in 26 years, the downward revision was milder than what was expected by economists. The euro-dollar pair stayed within its recent channel. The Asian and European sessions saw a very small range, though after the pair hit a high near 1.3640 following the US GDP release, the euro lost its momentum and fell down to the 1.35 level in later New York trading. The dollar-yen pair rose to the 98.70 level in today's trading, a 100 pip change from its open, and slightly above the highs we saw in this pair on Tuesday. U.S. stocks were up today, as were oil and gold prices. We mentioned earlier how that risk appetite weakened the yen, and this was the same case here. The dollar's advance stalled in New York morning trading as the pair ran up against the downward sloping line of resistance that had been established since early March. The dollar managed to move above that level of resistance and will now take aim at horizontal resistance at the 99.10 and 99.70 levels. Taking a look at releases coming out tonight, New Zealand will post its GDP for the fourth quarter along with its trade balance. Japan, meanwhile, will reveal data on consumer prices. Overnight, Germany will reveal its import and consumer price indexes. The UK posts data on housing prices, its current account, and the final version of its fourth quarter GDP. Also overnight, the Eurozone posts industrial new orders for January. Tomorrow, the US will release its figures on personal spending and incomes, along with the final version of UMich consumer sentiment. And that wraps up today's broadcast. Thank you for joining us here at CMSFX.com, and happy trading.